Why, hello, my friend. Yes, it's me, Nick Cranky again, right here, licensed loan officer with the Washington State Department of Financial Institutions. And here's my direct line, 425-202-5655. You know me as the guy with the ugly yellow sign that you called on for the zero down home loan and the home for sale. So, like all the other emails in this series, I'm just trying to help you understand, make sense of this so that it's less scary than it should be. And about this one, we're going to talk about income and how you qualify for things with this program. Now, this program, because it has income limits, it has what's called eligibility income. Like, let's see here, where is it? Where are you? Okay, so to make sure that you're not above these limits, and then repayment income, which is just figuring out what your debt to income ratio is as far as sort of stable income to pay back the loan. So typically they want adequate dependable income with a 2-year history. Qualifying debt ratios are 29% and 41%. However, good ratios, higher ratios considered with strong compensating factors like over a 660 credit score, stable employment history, potential for increased earnings, ability to save. Well, now what this first ratio is, that means what your total proposed mortgage payment would be in relationship to your gross income. So if you make $1,000 a month, it can't be more than $290. I'm just saying that as an example. And 41%, that means all of your debt, including the new mortgage and all the stuff that's on your credit report, can't be more than 41% of your gross income. But like I said, if you have like over a 660 credit score, we can do a ratio waiver if need be. Now, when I say potential for increased earnings, that means like you just got out of college and you're in an entry-level position in your chosen field. So the sky's the limit. Ability to save means you got some money socked away, more than what they require. Income may be verified with a written VOE, 1 month's current pay stubs, or 1 month's pay stubs and 2-year W-2s. Well, this isn't entirely right. You're going to need 1 month of pay stubs with all your year-to-date stuff on there, and 2 years of W-2s, and 2 years of 1040s. See here, self-employed borrower requires 2 years history with 1040s. Pretty much, even if you're W-2, you need your full 1040s for 2 years. So, because USDA does not lend the money on this program. The banks do, or we do, or the credit unions do. They only guarantee partially it against default. So anyhow, just remember, 1 month of current pay stubs with the year-to-date information, 2 years of W-2s, 2 years 1040s, all schedules. The buy downs, it's that's something that's not really done much because I recommend against it because it's a waste of money. But anyhow, if you have questions about it, we can talk about it. Debts with more than 6 months of payments remaining must be included in the qualifying ratios. So that means if you have 6 months or less payments on something like an installment loan for like a car or something like that, we do not have to include it in the payment just to help you qualify. Now, student loans, in a lot, if you have them deferred for over a year from the date of closing or from the date of your first payment, a lot of times, like with FHA and conforming, they say, oh, you don't have to include that. Well, not with USDA. You have to include it no matter what. Of course, self-employed borrowers require 2-year history with the 1040s, but pretty much anyone does now. Disability and Social Security benefits, 3 years continued documentation with award letter or 2 months bank statements. You pretty much need, the award letter of some sort. You need to document it. The or 2 months of bank statements, just that won't fly. And then when they say grossing it up 125%, it's because it is tax-free. That's the same with like child support. We can gross it up because it's tax-free. And it depends on what tax bracket you're in. If it used to just be the 25% tax bracket, and now it depends on what bracket you actually are in. But anyhow, that's doesn't amount to too much, but it could make or break a deal depending. Um, but yeah, just so that you know, if you're on permanent disability, obviously you would have an award letter. If you're on temporary disability, with the doctor's letter that is properly verbed, we can get it to fly. But the doctors don't want to put themselves out on a limb and make a claim. But anyhow, I could talk about that if that is your situation. Just we've had success with that, and not just on one occasion. Now, salary increases within 60 days of the first payment due are acceptable. Meaning, say you're making $20 an hour and you get a raise to $25 an hour just not that long ago. We can use that new income for configuring your debt ratios if need be. So that could help you qualify if you're kind of got higher end ratios. A part-time employment must have a history of no less than 12 months to count that as income. That's kind of the same with overtime. You have to have more. Usually overtime you have to have 2 years, but sometimes you can have between 1 and 2 years, but you have to be able to document. Like you got a job at some company that has a track record of this. They're in a hiring spree or whatever. You could kind of use that sometimes with USDA. Now here's the thing: alimony and child support income must continue for 3 years and have no less than a 12-month history. Well, the 12-month history is not necessarily true, but you do have to show the continuance. So, like if it's child support and your kid's 10 and the child support order says they have to pay until they're 18, well, there you go. You got that. But you don't necessarily have to document a current 12 months. You could be 2 months out of a divorce and still be able to use that. But we could talk about that too. Any income of a non-purchasing spouse must be verified to make sure income limits are not exceeded. So if you're buying a house, as a married person with their separate estate, yeah, you have to qualify with them because they are going to, they're going to use this, to help qualify or to deny your loan or what have you. So let's see here. Oops, where was I? Okay. And this talks a little bit about eligibility income. Yeah, we can't use overtime if it's less than a year for actual repayment qualifying income, but for eligibility, for seeing if you're over the limit, they're going to count every single dime you get. And there's ways if you are over the limit or close to it where you can actually have, deductions, depending if you have kids or you're taking care of a handicapped person, medical expenses or child care expenses. So that could help. It just depends on what it is. Oops, this is into credit history. Oh, I talked about this in the other one, but this has to do with income. So say you don't make that much, right? Usually they want you to have under a 41% back ratio, but if you have compensating factors, you can get a debt ratio waiver, like over a 660 credit score. You don't have to worry about that. And also, whenever you have over a 660 credit score, you don't have to use your provide rental income history is typically. I'm kind of getting off track there a little bit, I guess. So self-employment income, obviously, they look at it a little bit more. You're going to need year-to-date profit and loss. Let's see here. And of course, if they want it more than 2 years, but they will go less than that if you have 2 years of previous successful employment. It has to be in the same field or 1 year employment or formal education or training in a related occupation or profession. So like it's if you were in college you get your degree and you started a business or in the same field, things of that nature. So let's see here. This just talks a little bit more about self-employment history. Let's see here. Commission income, overtime, and bonuses. See, this talks about it. Less than over 2 years, stable and dependable. Less than 2 years, underwriter must justify. One thing about declining income. You have to, usually, if you're in declined income, they're going to use the lower of the income instead of doing a 2 year average. Um, but, it depends. Like maybe you have less income because you're going to school. So you're doing less hours. I mean, there's a few different things I could tell you about what we've successfully had where we could use more income to qualify. And again, tax exempt income, Social Security, retirement, disability, child support, workers' comp, military allowance, public assistance, etc., etc. You can gross that up. It used to be 25%. They talk about whatever your bracket you're in here. And then here's some stuff about child support, but we already kind of covered that. But anyhow, I'm kind of rambling, so 425-202-5655. I'm here to help. Give me a call. Thanks.